Hi, I'm Nicole Urken, Research Director for Mad Money, and welcome to Behind the Scenes of the show. I'm here with Jim Cramer, and we're talking big pharma on a down day in the market.
Right.
Now, Jim, we did 3 weeks of healthcare focus.
Yes.
All of the names have continued to perform very well, from specs to larger cap biotechs. But we finished off with the pharma because we said, while we like growth, these names continue to work here.
Right.
And I think that might have confused some investors. How can we like the growth biotechs, but also like some of the more yield-oriented names?
I think that an international investor who's looking for a home will want to find yield and want to find safety. And one of the things that the big cap pharma companies have done very well is return money to shareholders. They're almost all, the patent cliffs are behind them, so there's no more sudden drop in earnings. They're all about bringing out value. Pfizer just decides, listen, we're going to continue to bring out value. Pfizer's done, as we said, a series of gigantic moves to bring out value. The takeaway for Merck, for a Johnson & Johnson, for a GlaxoSmithKline, for a Pfizer, it's all very clear, which is that these companies have make a lot of money. And they have good balance sheets, and they continue to return capital, and so they become banks for foreigners.
Now, I want to jump on, you mentioned Johnson & Johnson, Merck, and Glaxo. These were names we specifically highlighted because they've been relative laggards in the group. We had talked about highlighting Bristol, which has been a long time favorite.
We had to sell Bristol for action alerts. Now, everything you sell has been wrong in this sector. Okay, you sell Bristol at 40, and it goes to 43 immediately or something. But I understand that. I think that we were trying in action alerts to also try to rotate into some of the cyclical names. That's not working. Because of the collapse in China.
And also, one of the reasons this group is doing well is we are seeing a little bit of a shift away. Again, this rotational shift that everyone keeps talking about, but this very defensive-oriented market away from tech into the new tech of the pharma
I
and
think
of the
that's the right way to
biotechs.
look at it. I mean, people look at tech and they just say, okay, too much of it's levered to cell phones, which are coming down in price. Too much is levered to personal computers. So let me get into pharma. Now, I know that seems like a very silly move, but remember that pharma is big in the S&P, finance is big in the S&P, and tech is big in the S&P. And at any given time, when you sell tech, it's going to go into the other sectors.
Pharma is inventing. Pharma is taking their destiny into their own hands. We have Johnson & Johnson being looked at on a sum of the parts basis. We have Pfizer, which spun off Zoetis. So these are companies
Lilly has
that are
a lot
doing
of value. We didn't even go over Lilly. Bristol being revalued like a biotech. Glaxo seemed very cheap to me. When we went over Glaxo, I said, wow, that might be the one to own. So the group the group is a better safe haven than any other group I know in the market right now.
Got it. All right. Pharma isn't what it was even a decade ago. All right. Thank you, Jim. All right. Pharma, keep it on your radar. In this kind of a market, it's a group that continues to work. Stick with us.